We're joined today by Steve Renna, President of the National Association of Real Estate Investment Managers, to discuss liquidity and some of the issues affecting the health of the banking system. How do you see the structure of the real estate investment business going forward? Do you see new relationships developing between clients and investment managers?
Well, when you have an environment where investors have seen the value of their investment reduced substantially, or in some cases even lost, obviously any investor, whether it's an investor in real estate or an investor in the stock market, is going to rethink and question how and why they are investing. They may also question the amount that they're allocating to that particular sector of investment. So I think real estate investment managers are facing their clients right now, and their clients are saying, wow, we have a challenge here. What do we do with our existing investment with you? What do we do going forward? We're not sure we want to continue with the same model necessarily. Perhaps we might want more discretion in what you do as a manager, because the fund structure typically allows the real estate investment manager to have almost 100% discretion over the way the investment is made and then how the investment portfolio is managed beyond that. And investors now seeing that these portfolios have taken on a significant amount of devaluation, or want to come back into the process and say, well, maybe you should be doing this or maybe you should be doing that, and they really don't have a platform to do that. So going forward, we may be seeing investors seeking to have a little bit more discretion in how their money is being managed. And also, I think from the fee and compensation side of it, they may be rethinking how certain fees are structured, the amounts of those fees, the timing of when those fees are paid, and maybe requiring more on the back end as an incentive and maybe less upfront as fees. So it's changing right now as investors and managers have to realign their relationship.
And what are some of the major roadblocks that are preventing banks from increasing their lending?
I think as soon as the banks are able to deal with their own balance sheets and improve those balance sheets and get back into the business of lending, which is what they're about, then real estate will come along with that. The banks right now, as you know, are extending existing loans, putting off any kind of refinancing of that into the future. That day of reckoning is going to come at some point. The banks are going to have to deal with the loans that are on their portfolios. If they do not do that, they will not be able to make new loans. And that's not good for real estate either.
Thanks, Steve. For more information on this and other REIT news and analysis, check out REIT.com.